Hey everybody, Brett Rice, coreVISION Financial Group, coming to you today with another video in our coreVISION series. Hey, we ask that you go to our YouTube channel and subscribe to our channel so that way you can get notified when we post new videos and you don't miss any of the content that we're putting out there. So today we're going to talk with Brent Thoman as we do a state of the firm, where Brent's going to just talk about things that we've got going on here at coreVISION, things that have recently happened, market conditions, just things that are going on. There's kind of some general information for people. So I hope you enjoy the video. So Brent, thanks for joining us this morning. So what we're going to talk about, we're going to do a quick state of the firm update. We're going to talk about market conditions, things going on here at coreVISION, just some general topics. So why don't you, give a quick introduction of yourself?
My name is Brent Thoman. I'm a partner at coreVISION Financial Group here. I've been in the business for about 24 years. I started in this business with my father, who had been in the business almost 50 years. So this is just something I've grown up knowing all my life.
All right, thanks. So let's get into kind of what's current market conditions, what's going on in the stock market.
Well, if you haven't noticed, the stock market's been a little bit more rough than we've had here for the last couple of years. We haven't really had this type of volatility since the COVID start of February and March of 20. A lot of it has to do with inflation's been running pretty high. The Fed's coming out and being very hawkish, saying they're going to raise rates pretty aggressively. And the war with Ukraine and Russia has been some big deterrents of the market. I think the market may have overreacted these first 5 to 5.5 months, my personal opinion, because of the way the Fed's come out and said how aggressive they were going to be to cool inflation, concern of a recession where the Feds would actually put us into recession by slamming the brakes on the market, on the economy, and unemployment starting to rise pretty quickly. But when we've looked so far, actually the economy's been very resilient. The unemployment has stayed pretty low in the 3% range. That may change as time goes on. We're starting to see some smaller companies not hire at a pace that it's been hiring over the last couple of years. But in my opinion, and if you listen to some other economists and kind of our opinion here at coreVISION, is that the second half of the year will be a much better case for the stocks. Bonds, again, have been, for first time in a long time, have really seen negative returns and probably will see a negative return for once this year ends. We think it will get better. We do think it'll get better from where it's at currently. We think a lot of the rotation out of some of those bonds with the interest rates going up, that has hurt the value of the bonds, not necessarily the coupon rates, but now the coupon rates will go up. So we're seeing a lot of the funds rotate out of the old ones and into the new ones, which should hopefully see most of the damage be done in these first 5.5 months. And we'll see that start to come back towards the end of the year. We still are very optimistic. We do believe inflation will probably be coming down here, not only because the Fed's raised in May 0.5%. We're pretty sure they're going to raise in June and July 0.5%. They came out actually as of the 25th on Wednesday and said potentially in September maybe another 0.5%. We actually think that will cool down maybe to 0.25%, and then towards the end of the year maybe not have another raise or two, those last meeting or two, which we do believe the market will cheer that. Another thing is we do actually believe come midterm election here, which midterm elections are almost always a very volatile year in the stock market. We think there'll probably be some changing in Congress, whether it's the Senate or the House. And the market has normally cheered when you have a Republican and Democrat against each other, because the market likes certainty. And if you have one against the other and they're not going to get any new rules or new laws done, the market tends to cheer that because they know what the rules will be for the next 2 years. So there's a lot of things that we're positive on that we think this second half of the year will actually bring, maybe even potentially bring the market back to a positive. And when we talk about the market, I more or less talk about the S&P, which right now is down about 16.5%, with the Dow Jones down a little over 11.5%, and the NASDAQ, which is your tech stocks and things like that, is down about, Brett, you remember?
Like 26.5%.
26.5%. So I think the S&P has a real good chance of coming back to at least even, if not positive. If you look at some charts historically, in these types of years where you start off this bad, there's been a pretty good amount come back positive in that period of time. So that's why we're still pretty optimistic here. We still believe that you're looking for the long term and not the short term. So short term volatility happens. It's not fun to watch when you look at your statements or look on the news. I'll take Warren Buffett's little piece of his advice is when the market's going down, just don't look at it. Kind of say that tongue in cheek, but he's being very serious. He believes if you like what you own, then when the market's bad, there's not much you can do. And right now, there's no hiding unless you're in cash, which trying to get in and out and timing the market has proven not to work as well. So we're very long-term view kind of advisors, and we believe that if we've set a plan, we need to stick with that plan if we still believe in that plan for the long term. So the short term, not fun to watch, but it does happen, and we do believe the market will be resilient and come back around.
Okay, so you touched on a bunch of stuff there, but there are some things I think we definitely need some follow-up on. So you had touched on, you said we haven't really seen this kind of market volatility since March of 2020, and I think that, we talk to clients all the time, and people are very nervous about how much the market is down. I saw on LPL Research tweeted last night that this is the 4th worst start to a year in history. So it's significant. We understand it's very significant. The start to the year has been very poor. And contrasted to the last 2 years, the market's gone up so much that people are very nervous about that. I also think on that they said that 4 out of those 5 years it's finished 19% up on average. So I mean there is a lot of historical data that says, hey, a start to a year this bad though traditionally recovers. You just touched on it. We hope to see that. We think that maybe we're going to see that. So I don't, it is significant. I mean, I think a lot of times we look at that and say, well, there was some stuff an 80% run up in the last 2 years that you kind of would expect a market to pull some of that back, right? Because that's how markets work. They go up, they come down, they go up, that's the cycle. So when we talk to people about that, I think a lot of people are worried, hey, we haven't seen this kind of volatility in a while, but it's only been 24 months, 26 months since we've seen this. So I think a lot of time because the run up was so much that people forget that this is what markets do. So you've been in the business a long time. You've seen it go through these several times, so you talked about Warren Buffett saying just don't look at it. I think that's good advice, but in addition to that, what can you say to people that do look at it, and are concerned about it?
Well, what I would say is it is difficult. Again, I say that tongue in cheek, but and we have one of the, like I said, 4th worst historical starts. But if you look at that percentage wise, that's still not anywhere near 2020. It's not anywhere near 2008 with the financial crisis, and I'm fortunate or unfortunate enough to see in 2001 with the dot-com bubble and the 9/11. Those lasted longer periods than the 2020, and so far what this has lasted. I would just say when you're with your advisors, make sure you have a plan for the long term over the next 5, 10, 15 years, whatever that is, whether you're working or whether you're retired. Really, if you're working, it's actually an opportune time because you're buying at a discount if you're putting into your retirement plan. At the second part is if you're not working, hopefully we've talked or you've talked with your advisor that you're probably not as risky as what you would have been while you were working. It is difficult. I would say you got to sometimes be very careful. News stations have to have viewers, which have to advertise, which means they're going to put everything on there as sensational as possible. So be very careful of the red and the greens that you see on TVs and the worst point day. Again, as I talk to clients about this a lot, is we had the worst point day since 2020 in July. If you would have told me July was the worst point day that we'd seen, I may have not known that because I would have said it was probably February or March.
Right.
July was in the middle of it going up, up, and up. But when we say that, is really you should be looking at the percentage, right? I mean, if you look back in 2008 when the Dow was whatever that number is, it wasn't close to 30,000. A 1,000-point day there was a much bigger drop than a 1,000-point today when we're at 30,000 points on the Dow Jones. So be very careful of the sensationalization of largest point day drop or largest point day up, whatever that is. So just be aware that there's going to be always people that are on the side of being what they call the bear, which is very pessimistic about the market, or all bull, where it's only optimistic. just be aware of the news. Politics do play a role, but at the end of the day, the market's going to be based on the consumer. And our belief is the consumer will continue to do what it's done for hundreds of years, that they'll buy when they have the extra money. They'll slow down buying, but they'll continue to. We still believe in the consumer because the consumer is the one that runs the market, because they're the ones that are going to consume all the goods that are out there and services. So yes, right now we've got inflation that's high with the gas and gas and energy. But we believe inflation will come down on the other goods and services because people will spend more money on the other end, but inflation overall will come down. Housing's probably going to slow down, right? We've talked about that. The interest rates are going up on mortgages, so that'll slow that down, which means inflation on the wood, the metal, the whatever else like that will come down. So the overall inflation will come down, and we do hope there's some resolution sooner rather than later in Ukraine-Russia war, and we believe that'll help that come down too. LPL is still in the belief that there is no recession in the next 12 months. We're in that same belief in that camp. We just believe the economy right now is strong. We just want to be very careful when the Fed keeps raising rates, and that's why we think they'll slow that down the second half of the year, and the market will turn around.
Yeah, I think during the run-up, people complained that they felt like a lot of stock prices were inflated, right? And then now they're coming back and they're normalizing, these PE ratios, all this stuff is coming back down to where people feel like they should be historically, and everybody's like, oh my gosh, what happened? It's like, no, people spent the last 12 months telling us that all these prices were inflated, and so then the market does what the market does. I mean, this is how it just normalizes itself, right? People say, hey, I've been in this long enough, I need to get out of this because I feel like it's inflated, right? And then that's kind of how those people that are playing the market work, and then when it comes down, everybody freaks out. But it's the market doing what it is. So I know you touched on it, and to kind of wrap up this current market conditions discussion, you talked about you really feel like the rest of the year could potentially turn out to be good. Historically, the data we just talked about says that historically, really bad starts to the year, I'll say 80% of the time end up positive. What would you just tell people, about today's market conditions?
I would just say don't panic. Don't make any rash moves just because, and again, we talk about it. Do not be emotional about your investments. That's why you have an advisor. Hopefully that person is not emotional. We got to make decisions based financially, not emotionally. Again, real quick, what you just said is about from here. I'm not sure from here. Summer historically has always been a slow up and down time. I would say probably more the second part of the year, maybe in that third quarter, starting September, October, I don't know, somewhere in there. But we never know. I mean, they've always said sell away in May, but that's not necessarily happening all the time. But I would just say don't panic. Stay the course. If you had a plan and you were happy with the plan before this happened, stay the course. And again, Warren Buffett's favorite words are, when the market's going down, just don't look at your return. Just don't look at your statements. So that's what I would say at this point.
Okay, good conversation. I think that a lot of people are nervous, but when they call and you talk through, right, it's the statement's the same.
Yeah.
Don't be emotional. Are we still on track for our goals? Has your risk tolerance changed? Your time horizon changed? Have any of those goals changed? If that stuff's changed, is a different conversation than if you're saying, hey, I just don't like this, right? And, we had a conversation the other day where you talked about, you had someone call in very concerned about whether they could continue to go ahead and retire and stuff. And when you went through it and you said, well, yeah, your statements are down, your account value's down, but to your goals and to your plan, it's made a minor change to that plan.
Yeah, so just the quick example is if you had if they were retired and they were going to take money in December before everything went down, they were going to have X amount of dollars. At the point now, as of yesterday, they might be $100 less a month. Yes, the dollar amount on the statement being down looks big, but when you look at it in the grand scheme of things, the income that they would have gotten wasn't a big change. Now, I'm not saying $100 a month isn't a big deal, but when you actually put in perspective what you're looking at, it wasn't as big a deal, and they kind of said, oh, I didn't even realize that. So, like I said, be very careful of looking at dollars versus percentages, and that's tough. As humans, we're built to look at dollars. When we get our paycheck, we look at the dollars, not the percentages. So, like I said, don't panic. Make sure you and your advisor have a good plan. And if your plan was good before this happened, stick with the plan. Markets tend to be very resilient. And again, we're betting on the consumer, not betting on the politics. We're betting on the consumer. And the consumer, as yourself being a consumer, is usually going to buy when they have the extra money. So right now, they're tightening up just to see what's going to happen, but they will come back.
And I think that, one of the things that comes out of this is, you keep touching on, is you and your advisor. Find an advisor, somebody you're comfortable talking to, working with, and establish that relationship, build that plan, and then work that plan. I think that's a huge advantage to people who work with advisors, because then you have a plan and you know what that roadmap is and how you're going to get to that goal. Otherwise I think you're kind of just driving in the dark.
No, I would agree. And like I said, the worst thing is to not talk to your advisor if you're nervous. That's what they're there for. Again, we've had conversations obviously here recently because of the market. A lot of them say, well, you talked me off a ledge. Probably lack of a better term is what they've said, but they just need to know, you just need to know that what's going on, because when you're caught in the moment, it seems like you can never get out of it. But when you look out 3, 4, 5, 6 years, you look back at it and go, oh wow, well, it wasn't as bad as we thought. It's just in the moment. We, again, as humans, we're taught to, what's going on right now is the most important thing, but we need to look long term when we're talking about investing.
Great conversation about that. So let's kind of shift gears here and let's talk about what's going on here at coreVISION.
So, for people that don't know or haven't been in the office since, the remodel has gotten done. As you can see, we are in our new podcast room. Brent has set this thing up, so it's now to look much better on our podcast instead of kind of just going room to room to figure out where we can do it. He's done an unbelievable job getting it set up, but we are very excited. We're going to be able to look a lot better, be able to have more podcasts, different types of podcasts. They completed we finally got all of our furniture in for our second conference room. That only took about 6 months. But again, supply chain issues, we understand. But everything is complete. We're very excited with the expansion. Hopefully the clients have enjoyed the ones that have been here, and the ones that will be coming in, they'll like it. And to talk a little bit, we are in conversation, the group here. We want to probably have an open house maybe in the summer. We haven't decided on a date, and if we will right away, but we think we're going to have an open house for all the clients to come in and check out all the new rooms and the size and all the things like that. So we're really excited. It's already made a big difference. So we couldn't have been happier with what's happened.
Yeah, I mean, when people come in for the first time, they're immediately like, whoa, this is a lot different than the old place, But it's like, it's the same place. It's just, put some more makeup on her.
Yeah, I would agree. It's funny because before we did the remodel, everybody, they come down the hallway and they stop and look around because they're used to coming in and turning to the right. Now they come straight ahead because it was a hallway and we've knocked out that wall. So it's kind of funny to hear their reactions saying, well, what happened? What's going on? I wasn't sure this was the right place. So again, very excited. They did a great job in the construction. We couldn't ask for anything better. And it just is more functional now. Again, we love this room. Brent does a monthly podcast and things like that. I think it's just going to do more and more. So again, super excited, and hopefully we'll have something out here soon for an open house.
And speaking of podcasts, please go to our YouTube channel, subscribe. So speaking of our podcast, Brent, something we're going to do here soon is we're going to start doing a video series of frequently asked questions. A lot of times we get questions from clients that are like, hey, how do I do this? Where do I go find this information? Where do I get that? So what we're going to do is we're going to start a new series that'll probably also be monthly. We'll make one video or so a month, just talking about what those frequently asked questions are. Where do I find my tax documents? How do I change a beneficiary? Hey, someone's texting me. Is that you guys? What's going on? So we're going to walk through some of that stuff. We'll give some screenshots and some examples so people understand when they do see something like that, they can say, oh yeah, I saw that in a video. I was expecting this. We'll tell you, hey, we're going to start texting you.
Yeah, so I think that's going to be really, really, really helpful and really awesome. We have so many things that LPL has now, technology-wise, for people that are on the original, have been clients for a while, an account view. They've come out with account view 2.0. You can actually change beneficiaries on your own if you want, which actually alerts us, so we know that you've made beneficiary changes. where I don't think it started yet, but they're going to allow you to attach that ACH instructions to that. So some that are on the old one, when we meet, we're going to be talking about transferring you to the Account View 2.0. Much better. It's got a mobile app, a lot easier.
Yeah, I was just getting to say something about the app, because the app does some things the old one did not, and it makes it a little more user friendly. And I think it's really moved up in technology.
No, I would agree. I think it's, again, a sign of the times where technology is taking over. That's part of it. So I understand some people don't like that, but I think it's just something we have to live with over time. But I think it's going to be nicer that you can at least at your fingertips look to see what's going on. And again, like we said, frequently asked questions will answer some of those, where you'll be able to upload some of your documents to make sure they're on there. Again, attach an ACH. I think as time goes on, they're going to make that even more friendly. There's been discussion to actually request money from there. Not that we're trying to not have the personal touch, but sometimes you want to get something done right away, and you don't want to call, you don't want to email, you want to get it done. I think it's just making it a little bit easier for the clients. And we're going to continue to discuss every time. Again, you don't have to do it, but it's just something that's going to be available. So yeah, these frequently asked questions of who do I contact for a life insurance? Who do I contact for a 529 to get a beneficiary change, or this or that? So I really am excited about doing those frequently asked questions for the podcast. So I think it'll help out clients quite a bit.
Yeah, I think the idea is to give people a resource. Like if you think about it, at 8 o'clock at night when we're not here, not available, excuse me. So instead of that, you could just start the process on your own. It notifies us, then we can reach out and make sure, hey, this is what you're wanting to do and all that stuff. So I don't know that it's, like you just touched on, it's not to say, hey, we don't want that interaction or anything. What we're just saying is this is giving you another tool to help kick those things off on your own.
Yeah, no, I completely agree. We still are the hands-on. We want our clients to feel connected with us, but we also want to give the clients the option to be able to have the technology that maybe some of their friends talk about that they're somewhere else. So again, as things come available, we want to be on that cutting edge of that technology with LPL and offer that to our clients and just give you another value added to what we already offer now. So we're very service oriented and want our clients to understand that we're here for them. Again, you guys have done the about our pods, a little bit of update on that. We're up to 3 pods now, and I know we've done that, but those pods really are for our clients to say, hey, well, if you need beneficiary change forms, who do I get to? If I need trades and I can't get Brent, get to Brett or Bo, whatever that is we want to make it easier for our clients and understand that we are a family here, and we want our clients to understand that at any time, if one of us isn't here for some reason, anyone can help out, and we want everybody to know all the people in here, so we want them to be comfortable. So like I said, it seems to have been working. It seems to be working out. It has really given us the ability to expand and be able to get more things done for our clients.
Yeah, and if at any time you're not comfortable doing something on your own, or you're unsure, do not hesitate to call. Come in, whatever. Just reach out to us and say, hey, look, I know you guys have this available, but I'm not comfortable doing that. We had a meeting yesterday where we talked about taking clients through an orientation on, hey, we want to walk you through how this does. If you want to use it and you're not comfortable, we're more than willing to walk you through it and show you how to do that. So like you said, we're a very service-oriented group, and it's like, if you need that help, reach out to us, and we will gladly sit down with you and make sure that you understand that process.
No, you're exactly right. We did talk about maybe going through the first time a statement, just to make sure to understand what all those numbers and then parentheses and all that kind of, just so their clients can understand, hey, this is what that means. Withdrawals, contributions, net gain, net loss, whatever it is, to go through that, just so you're not out there going, I don't understand this. Now, obviously one time may not make you understand, but at least you have a better understanding. But we want to make sure our clients are comfortable with everything we do, and we don't want them sitting there going, I don't know what this is, but I want to ask a question. We invite questions. And ask us as many questions. That's what we're here for. We're not here to get you in 5 minutes and push you out and then hopefully don't leave because you don't want to ask a question or you're too nervous. We want you to understand. And we want our clients to understand that we're here for them. At the end of the day, if it's not for them, we don't have a business.
Right.
So again, we can't thank our clients enough for being loyal and staying with us. So again, ask questions. We invite that. Again, yes, the words I'll say: stay the course. If you have a good plan with your advisor or with us, try not to panic. I know it's tough to do, but please, if you're nervous, please call so we can talk. It just, short-term volatility happens. We know that happens, but we're still betting on the consumer. We're still betting on the long-term past history of the market, and we believe it will turn around. And if you were happy with your plan before this January, then we probably are still going to be happy after that. But if you have questions or you're nervous, please call. Do not hesitate.
So again, Brent Rice, Brent Thoman, coreVISION Financial Group. Our contact information will be here at the end of this video. Again, feel free to reach out, call us, email us if you have any questions or comments or anything. Again, we appreciate you watching these videos. Please go to our YouTube channel. And again, thank you very much for watching. Appreciate your time.